We've got a bunch of stocks at new highs today. So what's your forecast for NVIDIA?
Right now, when you look at NVIDIA, it's been a pretty impressive breakout. Finally broke out of this consolidation range, we'll call it, cleared 130. And if you measure that move, you apply it to the breakout level, the technicals here are telling you maybe 170, 175. Of course, we don't cover the stock, but that's the technical objective-based price move. And we're finally starting to see some relative strength in the name. Hasn't had a new high since June, but it's rallied 40% off the August lows. That's certainly showing some great momentum coming into Q4, and maybe enough to turn the weakness in the semiconductors over and create an inflection point in relative strength there.
As Wall Street awaits Microsoft, Meta, Google, and Amazon's earnings reports on their investments in AI infrastructure, NVIDIA's stock reached a record high on Monday, closing at $138.07. After a sharp increase last year, the stock has risen about 180% this year, which is astounding. It also reflects NVIDIA's well-known dominance of the AI chip market, which the company controls between 70% and 95% of, according to estimates from Mizuho Securities. In fact, NVIDIA is currently the second most valuable corporation in the United States, after Apple, with a market valuation of $3.4 trillion. NVIDIA CEO Jensen Huang, who is currently valued at an estimated $121.5 billion according to Forbes, is at the center of it all. The journey appears to go on as well. Huang stated earlier this month that NVIDIA is experiencing extraordinary demand for its next-generation Blackwell chips, which are scheduled to launch in the fourth quarter, in addition to the ongoing demand for its existing chips. The chips are already sold out for the upcoming year, according to Morgan Stanley, which recently held meetings with Huang and other NVIDIA executives. As investors continue to place bets on the artificial intelligence boom, NVIDIA's stock closed at a record high, putting the chipmaker in the running to be the most valuable business on Wall Street. On Monday, shares increased 2.4% to surpass $138. In June, NVIDIA's closing price touched a record of $135.58. After OpenAI, the company behind ChatGPT, announced a huge $6.6 billion fundraising round, the stock started to rise on October 2. Since OpenAI will need more of its AI processors to meet its increasing energy consumption, a large portion of that funding will go back to NVIDIA. With a wealth of positive news for the AI chipmaker, NVIDIA's stock price kept rising. Last week, Wall Street analysts reaffirmed their buy recommendations for NVIDIA stock. According to a forecast published by KeyBank, NVIDIA's new Blackwell processors alone are expected to generate $7 billion in revenue in the fourth quarter, while the company's older GPUs continue to see very strong demand. According to Wedbush analysts on Tuesday, NVIDIA's finances might also benefit from a possible fresh round of funding for AI firms. Additionally, at its AI Summit in Washington, D.C., NVIDIA demonstrated the power of its software products. During Foxconn's yearly technology showcase event in Taipei, NVIDIA and Foxconn revealed plans to construct Taiwan's largest supercomputer on the same day. In order to lessen NVIDIA's dependency on China in the face of increased trade tensions, Foxconn also disclosed information about a massive plant it is constructing in Mexico to manufacture NVIDIA servers utilizing its Grace Blackwell processors. With Monday's advances, NVIDIA is also one step closer to surpassing Apple as the most valuable corporation in the world.
All right, here's another thing we're watching. NVIDIA jumping today, set to finish at an all-time high as it closes in on reclaiming the #1 spot atop the market cap mountain. This coming as the chip maker seems to have cornered the market with Blackwell demand soaring and rival AMD's latest chip disappointing investors. So how should you be positioned among these big chip names? For more, I want to welcome in Dr. Stacy Rasgon, Bernstein Managing Director and Senior Analyst. Stacy, always great to see you. So let's talk NVIDIA here. This stock, Stacy, is up about 14% already this month. I'm sure it helps CEO Jensen Huang when he's out there, Stacy, saying, you know what, demand for my Blackwell chip, it's insane. That's his word.
Yeah, he's not holding back, is he, right?
He is not. But what do you make of this move, Stacy?
I'm sorry, what was that?
I just said he never does.
No, he doesn't. Sorry, what was your question?
Walk us through the move, Stacy. Is it justified in your opinion?
Yeah, look, so, the stock, if you go back a couple of months ago when they reported earnings, the stock sold off a bit after that print. And it actually wasn't really because of the demand. It was because of the gross margins. They had suggested margins come down a little bit into the end of the year, primarily on mix, by the way. And it's because a lot of these new products are starting to ramp and they're very complex and they're not cost optimized yet. And as people have, kind of done more of their checks as you go through the quarter, and we met with them and everything else, it's very clear for a few things. One is that, the margins, they're not coming down a lot. They're still well into the 70s, like they're fine. And the demand, like with every day that goes along, it just looks like it's getting better and better and better. And you're right, Jensen was out, I think, on CNBC or wherever, talking about it was insane. And, they're looking for material amounts of new products to ramp as we go from Q3 to Q4 as that product hits the market. But even the older generation stuff, the older Hopper chips, our demand is still off.
After the market closed on Monday, the chip maker's market capitalization was $3.4 trillion compared to $3.5 trillion for Apple. Over the past year, Apple, Microsoft, and NVIDIA have switched positions as the top three businesses. Following the announcement of the company's second quarter earnings, NVIDIA's rise has more than reversed previous falls. After NVIDIA didn't meet analyst estimates as much as investors had hoped, shares fell in late August. They were further impacted by a Bloomberg story that NVIDIA disputed that the U.S. Department of Justice had subpoenaed the firm in early September. Shares had also fallen as a result of worries that growing trade tensions with the U.S. might affect Chinese demand. NVIDIA's June 10-for-1 stock split has increased the company's recent volatility. NVIDIA's ascent may be aided by other recent good news in the semiconductor industry. Another sign that the demand for AI will remain high in the near future is the fact that TSMC, one of NVIDIA's chip manufacturers, announced sales that were higher than Wall Street had anticipated. The CEO of More Insights and Strategy, Patrick Moorhead, claims that artificial intelligence is popular. He told that he expects the AI data center trades to continue growing over the next 12 months, despite Wall Street's concerns about a downturn. The semiconductor industry's profits show that big tech's enormous expenditures on AI gear are far from over. According to the most recent WSTS data that JP Morgan examined, semiconductor industry sales increased by 15% from July and 28% from the previous year in August. In an interview on Tuesday, Yum Liu, the chair of NVIDIA's server maker Foxconn, stated that the company is increasing capacity in order to satisfy the insane demand for NVIDIA AI chips or GPUs. In an interview last week, NVIDIA CEO Jensen Huang stated that the company's most recent Blackwell chips have shown insane demand. On November 19, NVIDIA is scheduled to release its earnings. According to Bloomberg consensus forecasts, Wall Street analysts anticipate that the business will report revenues of $33 billion, an 82% increase over the previous year. Approximately 90% of Wall Street analysts that follow the stock that Bloomberg tracks advise purchasing NVIDIA stock.
Equity team. Mike, good morning to have you here because growth equity is what's leading us again this morning. Good to see you.
Good to see you too.
So tell me how you guys are looking at the AI trade versus general growth and where you can find maybe some potential outside some of the core AI stuff. But let's kind of start at the nucleus here at the core of it. I mean, NVIDIA's making highs again. So does that assume that our old winners from the first half of the year are going to come back to lead us?
I think for us, being long-term investors and trying to follow, all of the secular growth themes, two things stand out. One, AI and NVIDIA in particular, that is the zeitgeist. And when so much focus is on one thing, we have two choices: stare at it and try to see things other people don't, or listen for the dog that isn't barking and look elsewhere. And I'm excited about the opportunities, frankly, to do both right now.
Okay.
The third quarter results season has begun, and a FactSet analysis released on Friday predicted that the S&P 500 firm's third quarter earnings growth rate would be 4.1%. However, if firms like NVIDIA, Alphabet, and Meta Platforms surpass predictions, this figure would rise to above 7%. Even when market leadership expands, that much is dependent on a small number of powerful corporations. An analysis of the European and international markets for the coming day, Wall Street's overnight record highs, and NVIDIA's latest attempt to unseat Apple Incorporated and overtake it as the most valuable business in the world are Tuesday's top stories. In Asia, where Tokyo's Nikkei index is once again above 40,000, the resurgence of interest in technology, AI, and corporate profits has set the tone, and is probably going to boost stock markets in Europe as well. Following a 2.4% increase in AI darling NVIDIA and a strong start to the third quarter earnings season, chip stocks drove the S&P 500 to a record high close overnight, and the Dow Jones Index to surpass 43,000 points for the first time. On Monday, NVIDIA's stock reached its highest ever closing price of $3.39 trillion, which is just less than Apple's $3.52 trillion and more than Microsoft's $3.12 trillion. The evidence that is now available indicates that there is still a strong market for AI, and TSMC executives' remarks on Thursday may serve as a stimulus for NVIDIA. However, should investors purchase the stock before October 17? Buying NVIDIA stock before or after TSMC announces isn't really that important, to be honest. With the stock closing at a new all-time high on Monday, NVIDIA's market capitalization reached $3.4 trillion, more than 200% of its gains over the previous year. Rewinding a bit, the stock has increased 32,770% in the last 10 years, which serves to highlight the advantages of purchasing high-quality equities and keeping them for the long haul. To be clear, NVIDIA has a lot of room to develop already. Given that the company is currently priced for 65 times earnings, some investors may decide to sell. NVIDIA's fiscal 2026, which begins in January, is expected to generate $4.04 in earnings per share, according to analysts' consensus expectations. The price may not be as outrageous as it first seems, given that translates to a forward multiple of 34. Furthermore, the majority of experts think that the adoption of AI is still in its infancy. Over the coming years, the market value of generative AI is anticipated to range from $2.6 trillion to $4.4 trillion yearly. Those projections may prove to be conservative when new applications and technological advancements arise. It makes little difference if you purchase NVIDIA stock before or after October 17, as long as you do so, given the company's crucial role in the AI revolution and its promising future. If you want to keep up with NVIDIA's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
And then you couple that, AMD had their event last week. And again, I always say this, I don't want to knock AMD, like they're doing very well for where they were coming from. Like this business for them might do $5 billion this year. It was $0 a year ago, so that's fine. But if you look at kind of the roadmap that's going forward, and you look at some of the specs they put in for their new product, it's called the MI325 is the new one. It barely stacks up against the Hopper chips that NVIDIA has been shipping for a year and a half, 2 years. And the new NVIDIA chips, the Blackwell chips, the new stuff, I mean, it's night and day in terms of the capabilities of that. So the gap in terms of timing between what NVIDIA is delivering, what AMD is delivering is still very, very wide. I think it's still NVIDIA's game to lose. And then I think finally, it even gets with some of the comments you just made about Alphabet and nuclear reactors, and people are foreseeing demand continuing, and they're actually making investments to enable that. And with all these stocks, like there's a big worry that just the numbers have gotten so big so quickly, they're just worried about sustainability. But clearly everything we're seeing from the supply chain and the customers, it doesn't suggest that there's any sort of faltering of demand anytime soon. Now, quite the opposite. So I mean, that's what's been taking it up.
With a new all-time high of $3.40 trillion on October 14th, NVIDIA, a fabless semiconductor business, now has the second largest market capitalization, after Apple, which has $3.52 trillion. As the biggest foundry that produces 60% of the world's semiconductors and more than 90% of the most cutting-edge chips, NVIDIA's short-term prognosis is positive for Taiwan Semiconductor Manufacturing Company, TSM, a major semiconductor supplier to NVIDIA, is also expected to see an increase in value. Analysts have high expectations for TSM's third quarter, Q3, earnings, which will be released on October 17, the same day as Netflix's key 3 release schedule. The chipmaker is anticipated to profit from the artificial intelligence, AI, boom that fuels demand for chips, and experts predict a 40% increase in TSM's key 3 earnings. At the end of the third quarter, TSM's net profit was projected by SmartEstimate to reach $298.2 billion, or $9.27 billion US dollars. The share prices of TSM have also increased throughout the AI boom, as the majority of TSM's key tech clients, including Apple, NVIDIA, AMD, Qualcomm, and MediaTek, rely largely on TSM's capabilities. As a chipmaker, TSM is well positioned to benefit from the expanding semiconductor market. With an estimated cost of $65 billion, TSM is currently extending its reach by constructing 3 new plants in Arizona and intending to increase its footprint in Europe. With a high estimate of $265 and a low estimate of $119.37, the average target price for Taiwan Semiconductor Manufacturing Co., is $206.54 based on the 1-year price targets provided by 15 analysts. An increase of plus 7.46% from the present price of $192.21 is implied by the average target. Taiwan Semiconductor Manufacturing Co.'s average brokerage recommendation is currently 1.6, indicating an outperform status based on the consensus recommendation from 17 brokerage firms. A score of 1 indicates a strong buy, and a score of 5 indicates a sell. So what does this really mean for NVIDIA's stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.